Following the decision of the European Central Bank to introduce the outright monetary transaction program, the Europeans asked for the IMF expertise, and the IMF is likely to fulfill a number of roles should a European country apply for this newly introduced OMT program. Clearly these are uncharted waters, because the IMF has never been fulfilling such a complex, multi-pronged role that it is expected to fill should a country indeed apply for an OMT program. It's true that traditionally the IMF has gained, gained credibility, was able to really come forcefully on the borrower whenever it was putting money where its mouth was. This is likely not to be the case in the case of the OMT program, simply because Italy and Spain, the two most likely candidates for the OMT program, are simply too big for the IMF coffers. And therefore, what the IMF is likely to do is, first of all, to provide its own expertise in terms of conditionality design and monitoring. Oddly enough, as it may seem, this expertise may be even sought by the potential, by the candidate countries themselves, who are increasingly eager to anchor any discussion on sound economic ground. What we see going on in Europe is sometimes a discussion that is very much anchored on dogmatic principles, and it shies away from economics principles and economically sounded principles. As odd as it may seem, differently from previous cases, this time maybe even Spain and or Italy, which might be asking for the IMF involvement. Not certainly on financial grounds, because as I said, the IMF has not enough resources to really stabilize those countries. But the IMF does bring a third-party perspective. It brings more distance. It would be able to anchor the discussion to economically sound principles, and at least to some extent stay away from politics, and also introduce some kind of balance vis-à-vis the European institutions that some European countries resent are heavily dominated by Germany and France. There won't be any resolutive decision, partly because the largest threat is still coming from Europe, and the Europeans, of course, have their own policy-making bodies in which they do take decisions, or they don't at times. But this is clearly going to provide an important opportunity for the rest of the membership, for the IMF Managing Director, to exert further pressure, further leverage on the Europeans. Clearly, the Europeans are now working on a plan for a banking union, and yet some of the early signs that we were able to detect are not at all encouraging, because there are signs that the project or the blueprint on which the Europeans might be converging may not be the one that markets were expecting earlier on. In other words, it would be important that this banking union is indeed a union, and is not something patchy that is worked out, to please this or that other member of the euro area. And certainly this is something where the IMF can contribute, both in terms of expertise, but also in terms of being a third party, a referee. And also, clearly these meetings do provide an opportunity for the whole IMF membership to come together and provide, further leverage on the Europeans. Again, this may not be resolutive, but certainly this is something relevant in its own regard. So important progress has been made in ratifying this package. However, some countries have not ratified the package yet. One of those countries is the United States, because the United States holds 17% of the voting power of the institution. Clearly, until the United States does approve the package, this cannot come into effect. And therefore, the expectation right now is that the package might be presented to Congress after the presidential elections as early as next year. And clearly this is important because the approval of this package will provide some further leverage for the emerging economies who clearly have risen their status in the global economy over the latest years. And this is an important building block towards a dynamic governance reform process whose next phase has already started and should complete by January of 2014.